Hello and welcome to Big Deal. Now, talk of the town is the slowdown in the deal street, which is a combination of various changing dynamics, liquidity squeeze for one, market volatility another, and even change in business views due to various macro factors accentuated by geopolitical situations. Now, let's take stock of how the second half of the year looks like for mergers and acquisitions, transactions, fundraising, from one of the finest deal makers I know and top corporate lawyer in India, Zia Mody of AZB Partners. Zia, always a pleasure to welcome you on CNBC TV18. Let's begin with your sense of the current situation on the deal street. Is the slowdown for real?
I think the answer is yes. If as a law firm and an intermediary you are judging the frequency of the deals, the competitive nature of earlier biddings, the high valuations that were floating around, I think I would say that there has been a slowdown. I think the truth of the matter is that, as we all know, the large PE boys and girls have raised a huge amount of dry powder. They have to invest it. But I think they will invest it more cautiously. They will not rush in to bid out every other PE bidder. Their IC committees will definitely be asking for some sort of valuation presence. The promoters will take time to have their expectations come down, given that they've been used to such great numbers and valuations last 6 months ago. So I see the next 2 quarters, including the last quarter, being a much more slow investing climate compared to what it was earlier. 2021 was out of, whack. It was a deal a week virtually, and we couldn't get enough of India. This time, I think the world is just taking a pause, seeing what's happening in the US with the Fed rates, with our response by the RBI. Credit has become expensive. And so the leveraging has also slowed down.
Yes. Right. So from all around, you have said all the businesses of the transaction is seeing a slowdown, and the macro factors have really impacted that, Zia. And yes, 2021 was one of the breakout years, a fabulous year on the deal street. Some spillover came in the first half of this calendar year. But the next half of this year is looking extremely bleak from the transactions point of view. In fact, some of the numbers I was looking at in the first half were also inflated because of one large M&A by a conglomerate, then one big IPO with LIC finally making it to the public market. So some big, transactions really inflated the numbers, not as much in terms of the number of volumes. Now, let's begin with your sense on the India Inc. mindset, because a lot of the M&A activity and that animal spirit to go out and buy, all that really triggers from the promoter's mindset to really buy and go into some activity. Do you think this uncertainty and cautious approach is really leading to a dampening of sentiment over there as well?
So, as always, Nisha, the answer is it depends. So, we have seen the HDFC Bank merger, right? That was a pure domestic deal. And my own belief is that we will see some more of these mergers, simply because, the RBI would like to drive this sort of process for more regulatory certainty, etc. Then you see strategic deals, which, regardless of the economy, are not going to go away. We just finished selling the wholesale to Adani. Now, that was a strategic deal in a sector which will continue to grow, and therefore there will be probably more in that transaction. We look at insurance, where the run rate has gone up to 74%, and subject again to valuation. There is no reason why there should not be more M&A. We look at an Axis trying to make its play and gain its place rightfully in the sun, when we looked at Citi and we represented Citi in selling its consumer business to Axis. So I think strategic sales, if they come along with the right asset for a decent value, Indian promoters will still be interested. As far as Indian promoters going abroad, I think they will be more cautious simply because they will wait for valuations to correct in Europe, in the US. Our promoters normally go outside for technology to see if they can acquire IP and then manufacture it better back home, do a make in India story. I was hoping for much more defense, frankly, activity in defense, but I don't think that that is coming in the near future. So my take is private equity will be cautious, take a bit of a pause, come back because it has to. The valuation resets will happen, but the strategics, domestic to domestic or multinational to domestic, will still continue if the asset is attractive.
Right. So strategic intent, that's where the focus is. You mentioned many points and I'll take it up one by one. But since you mentioned some of the sectors here, I want to ask you about one sector which has created a lot of buzz in the last few months, cement sector transaction. And after that, the understanding is that many big players would like to really consolidate this sector and keep themselves ahead of the new entrant. What do you think about this space in particular?
Well, it definitely is a space that must grow if we have as a country bet on infrastructure, right? For infrastructure, if you need to build, you need cement.
Yes.
I think Kumar has already demonstrated that he's planning a capital outlay of 20,000 crores in cement. Adani has jumped to the number 2 position simply by this acquisition. So I agree with you. I think that this sector will remain active. The smaller players will hope to get out at a good premium. The larger players who want to consolidate, subject to CCI, will want to buy. And so this is going to be a growth story for this sector, for sure, in the next 5 years.
Right, that for sure. But how much is a constraint? Now, leverage buyouts, do you think would be definitely constrained in an interest rate hardening scenario? Is that coming in the way of many consolidations or mergers and acquisitions here?
I'm not sure they will come too much in the way of high important strategic M&As. I think they will definitely impact on the private equity guys who are used to getting back-end leverage. And so the size of those deals, the ability to write that big ticket check with the back-end leverage, that will go down.
Yes, and what about private equity mindset, Zia? How are you seeing that space? Now, private equity actually gave a lot of growth capital. They had a very good run, buying out a lot of new digital companies, as well as many assets of the future.
So I don't see private equity in any way falling out of love with India. They've made money, and this doesn't mean that they won't make money. They've made great returns on some of their previous investments. And they have, I think, internally, is my sense, allocated when they have raised, especially Asia money. They've allocated this time a lot more to India than they earlier had done. Earlier, as you know, the large focus was China. I think we've been the greatest beneficiary of getting a much higher allocation. What we need to demonstrate is 2 things. One is continue to have them believe in the consumer market, have them continue to believe that India will grow more than other economies simply because of who we are and our population. And to be able to convince their IC that the next 5 years or 3 years will definitely allow what they have invested today to yield proper returns tomorrow. One of the things that always depresses them is the rupee rate conversion to the dollar. So now it's 80 rupees virtually, whereas that is going to affect their return in dollar terms. So I think that will definitely be a source of concern as to how much more depreciation. Here's hoping the RBI will be able to hold it. But I think the dry powder allocation to us is almost inevitable. Anyway, that's what I'm hoping, because as AZB, as a law firm, we are a private equity engine. What we have been speaking to our country heads is that they say we are definitely pausing a bit, but there is no question of India not paying the price for people.
Right, you mentioned Zia, about the rupee impact. Yes, that is going to impact the returns meaningfully, and that's why they are going to look at that with caution. But another aspect could also be that the valuations have weakened, the equity markets have been volatile. So right now, are they really in a wait and watch mode? If the valuations drop further, that's why the deal flow will be slow right now till the market sentiment settles and finds its levels at some point.
So if you look at the IPO market, where is it, right, Nisha? Whatever little was there was sucked up by LIC. The ones that you see coming to market are very few, not of a large size. DRHPs are being filed and the card is being taken for a year. So I think if you can't access the public market, the promoter who needs the money is going to have to talk to private equity. And then when he does talk to private equity for the money that he needs, the private equity guys are going to say, okay, let's talk the value. So that's, I think, how the valuation reset will happen and deals will start again.
Yes, so Zia, you touched upon a very interesting point. My favorite subject these days.